Private equity. An alternative investment class and consists of capital that is not listed on a public exchange. Valuation services. Valuations of business, tangible assets, intellectual property, intangible assets, stock and securities, ESOP and private debt instruments. Financial advisory services. Primarily focused on providing advisory services in the areas of corporate finance, capital structuring, transaction advisory and M&A. Credit rating advisory. Our team's experience can bring in immense value by getting the desired rating upgrades or saving them from downgrades by fine-tuning the strategy. TEV study and DPR report. Evaluating the technological feasibility and economic viability of project to finding out the degree of risk involved. Insolvency services. Assess the financial position of the firm, partnership, LLPs and individuals, in several instances and try to save their business. Training. We are a pool of senior banker, academicians and professors specialized in all kinds of soft skill training. We are specialized in solving your all types of financial needs.
Virtual session on Navigating the World of Venture Capital, Tips and Strategies for Startups. Mr. K.K. Gupta, Director, Resurgent India Limited. Mr. K.K. Gupta is currently associated with Resurgent India Limited as Director, handling all kind of financials worries of the clients, core competence in the field of corporate finance and management consultancy, and believes in providing complete and hassle-free solutions to the clients at Resurgent India. It is a knowledge-oriented, full-service investment bank and financial consultancy firm that provides service in area of debt, equity and transaction advisory. Mr. Rajesh Sahgal, CFA and Managing Partner at Equanimity Investments, a Wharton and XLRI alumnus. Rajesh's speciality is finance, marketing, and management. He is a CFA charter holder and also has a postgraduate diploma in securities law. He has made 20 angel investments since 2007 and has a ringside view of the overall startup ecosystem. Mr. Aditya Puri, Associate Vice President at Impact Partners Impact Investment Exchange, IIX, with over 8+ years of work experience. Aditya Puri is an investment and transaction advisory professional working within the Impact Partners team of IIX as the Associate Vice President. His primary role is to assist high-impact startups from across South and Southeast Asia with technical assistance, structured transactions and ultimately raise capital from investors. At IIX, Aditya also manages the Impact Partners platform, a digital tool that helps enterprises connect with and raise capital from investors. Mr. Akash Agrawal, Junior Partner at Earlsfield Capital. Akash is a successful technology entrepreneur turned investor. He has a deep understanding of technology and comes with strong relationships in the technology investment ecosystem in India and Southeast Asia. Prior to joining Earlsfield Capital, he co-founded Boothwala, a leading milk and grocery delivery company in India, which he started, nurtured and successfully exited in 2019. At Earlsfield, Akash is a senior member of the investment team, supporting overall investment and execution. Mr. Hemant Kumar Royar, CFO, Finance Director Subcontinent Region, at DP World. Mr. Hemant is a chartered accountant, chartered financial analyst, and cost accountant with nearly 3 decades of extensive experience in business partnering, change agent, finance, treasury, budgeting and forecasting, taxation, insurance, commercial operation, risk management, investor relations, legal, secretarial, information technology, listed company related compliances, and procurement. have successfully built and lead large and immensely engaged teams to deliver exceptional results. Mr. Prakhar Agrawal, founder at Adept Ventures, an entrepreneur by profession, having been a part of India's VC ecosystem since 2014, involved in 200+ seed stage transactions across various sectors. First hire at AngelList India to grow the organization to its current stage in India, and previously the first hire in India to head emerging markets investments for Will Cap. Mr. Rajal Singhvi, Principal Investments, Mumbai Angels. Rajal has 11 years of experience of working in diverse areas, entrepreneurship to finance, being on both the industry and institutional side. She has worked with marquee names like Aditya Birla Capital, Kotak Mahindra Bank and Kirohaj Corp in roles ranging from raising capital for businesses to sanctioning capital for them. She brings a unique perspective of being on both sides of the table and has a keen eye for detail.
Gupta sir, you are on mute, please.
Sorry for that. Good evening, friends. I am K.K. Gupta, your host. So I am thankful to Mr. Rohan for informing about the profile of our eminent sixth speaker in the webinar. The webinar is of great importance in these days. Navigating the world of venture capital, tip and strategy for startup. I think this is a subject which was rightly chosen by the researcher in India, who is an investment banker. So we are going to discuss the recent trend in the venture capital funding, challenges, strategy, and importance of ESG and sustainability. I think when we are talking about the startup play very important role for the development of the economy. You see, from 2016, the startup were 452. Now, as per the statement of Honorable Minister, it has gone up to 84,000 plus as on 30th November 22. And the major startup are in Bangalore, Delhi, and Mumbai. India has also become the third largest startup economy. I'm not talking about the other thing, I'm talking about the economy in the world, and also crossed 100 unicorn in 2022. The country now rank behind USA, who is having 661, China 312. Now figure available with me, 150 unicorn with cumulative valuations over US dollar 350 billion. India top China by creating 23 unicorn in 2022. I think that means India is progressing like anything. When we are talking about the investment by the venture capitals, so major portion contribute to a consumer, fintech, SaaS, which we are talking about the software, another consumer constitute about 49%, and fintech 12%. Now we are going to discuss what is the need of the entrepreneurs, whether they are going to angel capitals, angel investors, because they want a small loan, they will go to angel capitals, angel investors. When you're talking about the venture capitals, it plays a very important role. When you see the past startup, when we are talking about the OBIO, where the investment was done only 13.4% in 2014. That was 240 crore rupees. And when they existed, it is a wonderful figure, 10,000 crore rupees. See the how much profitability, how much venture capitals, although the figure also suggests that success rate for a entrepreneur is hardly 16 or 17%. So we are going to discuss all aspects, whether we are talking what are the necessity, what are the needs for the venture capitals, and how the entrepreneurs can approach the venture capital or the angels to sell their ideas. And what are the needs, what are the requirements by the venture capital? What, because all person, eminent speaker with me, are financial experts. So first of all, I'm requesting Shri Aditya Perry, Associate Vice President, Impact Partner, Impact Investment Exchange. Sir, just Mr. Perry, I want to know from you, what sort of reactions do startup need to demonstrate to attract the venture capital funding? What information they should pass on to venture capital so that their fund can be released to them? We are also talking about the first check. First check is being given by the venture capitals. So what are the needs of the venture capital to assess the requirement of the entrepreneurs? I think this is a major question these days. What the venture capital look into before considering the proposals? I hand over to Mr. Aditya. Aditya sir, please.
Yeah. Thank you so much, Mr. Gupta. It's a great honor to be here and be amongst the panelists on this session. To answer your question, I think given the current macroeconomic situation around the world, as long as enterprises are able to show some level of sustained growth with good unit economics and sound business fundamentals, I think they're still able to raise capital from investors. Recently, the effects of the 2021 euphoria are quite clearly visible as of now, wherein after the capital absorption, companies aren't able to match the projected growth rates with how much capital they actually raised previously. This in turn is causing a negative signaling effect, wherein companies aren't able to raise further rounds because of the high valuations through which they raised the initial rounds. Now, those companies which actually focused on getting the financial and the business aspects right from the get-go, they are currently at the cream of the crop, right? And they have access to all the dry powder that's actually remaining in the market. And right now, what we're seeing is these companies are the ones which are growing at a tremendous pace and propelling them even further from the competition. Lastly, I think aside from just the traction, the quality of the traction also matters in addition to the quantity and the growth that you show on your books, right? So just to give you an example, I think for a D2C company, you could get a tremendous amount of growth rate by spending extensively on your customer acquisition. But in the future years, if you're unable to retain them, or if you have to spend equal amounts in kind of retaining these customers, then that 1 year growth rate that you've had doesn't really hold so much of a value. So I think right now when interest rates are rising, there's global uncertainty going on. It's important to kind of look at a combination of these factors and parameters as opposed to looking directly just at the growth rate and traction numbers as well. Hope that answers your question.
So, Mr. Aditya, you're talking about the growth rate. Whether other aspects regarding the market, size of the market, what is the team they are having, or unfair advantage and maximum commitment for exist, you can say any investor, any venture capital want to give some time so that they can have the return and they can exit from the business. So have any view on that aspect? Because these are the major aspects which is need by the venture capitals.
Yeah, sure. I think speaking from my perspective and the kind of investments that we make at IX, right? One of the key things that has actually transpired over the last couple of years, especially post-COVID, I guess, is the growing emphasis on sustainability focused businesses. Right. So now, given this kind of uncertainty in the market, we as investors are still getting a significant number of exits and interest in the companies that we have, right? Purely because they're still able to provide certain amount of returns to them, even during such tough times, right? I think right now it's become more of a norm for enterprises to be sustainable and incorporate these practices in their DNA, right? And it kind of gives a comfort to investors as well, right? If you, for example, if you take into account two comparable companies in the same sector and geography, I think it's almost always the case where a company which has sustainability and diversity incorporated within their DNA, which gets the funding or which is able to raise additional capital. So this is like another trend that we've seen growing in the last couple of years. And I think in terms of the total capital deployed as well, sustainability related investments have been growing, and it grew like 78% in last year, whereas with the rising interest rates and the VC funding down by 33%, it still shows like tremendous growth opportunities for companies which do incorporate such soft business practices.
Mr. Perry, what you're talking about the business model strength, because business model is the most important aspect for any entrepreneur to approach the venture capital. Have any view on the business model, how they should have a business model? What is the growth percentage they should have? And what should be the profit? When we are talking about the profitability and we are talking about the profit also. So how you have any view on that aspect for a business model?
Yeah, sure. I think from any investor's perspective, I think it's great for a company to be profitable, right? I don't think there's any negative effect of a company being as profitable as it can be. But right now, given the economic downturn that we're seeing overall, right? So I think there's a growing focus on having steady cash flows and ensuring that you're able to have sufficient runway to actually run your business as opposed to maximizing profits. Right. If companies are looking at maximizing profits more often than not, they have extra like operating expenses as well, right? And there needs to be a lot of effort on that front. So right now, and at least in the last few months, starting maybe mid of 2022, I think the primary focus has been on maintaining steady cash flows and having enough runway, like for 12 months to 18 months to be able to sustain by yourself, even if you don't get enough of a raise. And I don't think companies should actually depend purely on fundraising to be able to sustain their business. And it's more of an added cushion as well for investors who are coming in to kind of see the sufficient runway that they have to, kind of have an organic growth instead of trying to push it and be inorganic.
You're right, sir. What we're talking about the sustainability. Can you elaborate what is sustainability in the business?
Yeah, sure. So I think I mean, I myself have been working within the impact investing and sustainability space since the beginning of my career, right? But so even at IX, I think our primary focus is to kind of transform the financial system so that women, climate, environment, and the underserved communities have like a greater voice, right? So all of the investments that we look at are predominantly into enterprises which are a triple bottom line, right? Meaning they have positive impact on the people, planet, as well. So I think in terms of the kind of enterprises that I've worked with, majority of them are in these soft sectors which employ a significant amount of these underserved communities, right? And if you're talking about like a tech-oriented company, I think it's more towards how diverse, inclusive you are with regard to your own HR, how you manage your business practices, and how it is that you deal with clients, customers, and people across the value chain that you operate in. So these are some of the key areas that we look at when prior to making an investment decision.
Excellent, Mr. Aditya. Well, you're talking about the ease of doing business. So tell something, what is the ease of doing business? Because the ranking of India has improved a lot. So have any view on the ease of doing business?
Yeah, I think generally the Indian government has taken a tremendous approach in trying to get foreign capital into India, right? And I think they've eased out on some of the regulations and policies that they've had. So right now, it's a lot easier for foreign investors to kind of come in and deploy capital for the most part, at least with regard to the equity route. In terms of debt, while there are some restrictions that are there, investors can always choose to go through the ECB route as well to kind of deploy debt into India. Additionally, there are certain incentives on trade financing as well. So for startups which are unable to raise through debt and equity, they can look at this option of trade financing as well to sustain their business. So given all of these factors, I think the government of India has done a tremendous job in promoting the startups within the country and putting them on the global level as well.
Very nicely, I think, Aditya, you have covered everything which I want to say. One another question, although I'm taking much time from you.
Sure, no worries.
Talking about the equity and debt. Debt is better or equity is better?
I think that's kind of a subjective question. Depends on what the company is looking to achieve, right? Obviously, if you're taking debt, you don't dilute your ownership.
Maximum return, they want it is much higher. Some people will ask for 100% return also. So point is that is better or equity? Because this is a question from some people also.
Yeah, I don't think there's one right answer here in saying which is better than what. It really depends on how you want to scale and grow your company.
You are an expert in a project financing from the World Bank, IFCI startup. So I think this is a major question. Whether they will go for the equity or the debt. Leave it, because in my opinion, debt is much better.
So I think if
get it. I'm coming to Professor Agarwal, founder, Adapt Ventures. Mr. Agarwal, what are the key expectations of the venture capital firm when investing in startup? I think this is the most important question. So Aditya sir has already explained very clearly what are the needs, what requirement of the venture capital.
Yeah.
What is expectation by the venture capital?
Of course.
Please, Mr. Agarwal.
Right. So I think any investor invests into the company with the prospects of growth. So depending on which stage the company is, at the earliest of stages, I think when investors invest in companies at an idea stage or a pre-product stage, I think they are backing the founder more than anything else. So the expectations of the venture capitalists are around, product building. How will the founders get the early story out into the market? What are the creative hacks that they can use to get their brand known in the early days? What are the skills that the founders have to sort of inspire people around them and to be able to hire the right resources around them? Because at the earliest of stages, founders are always strapped for money, so they cannot throw money at problems and they cannot hire too many people. So they have to be inspiring themselves. They need to have that intellectual curiosity to be able to inspire others to work with them on that same mission at the end of the day. So they need to build a team of entrepreneurs around them. And what are the skill sets that founders have from their past work experience, from their alumni network, that can help them in sort of building the product out? I think beyond that, it is, and how are they going to use technology as a lever of growth? What is the differentiated offering that they are going to sort of offer in the market? And why are they better than the other folks? Obviously, as the company grows and progresses, and it becomes a slightly later stage company, so when it moves from a pre-seed stage to a seed stage to a series A stage, series B stage, every sort of stage of investor comes in with different expectations. At the earliest of stages, it is about demonstrating product market fit, about getting your story out. As it becomes a slightly later stage company, the unit economics, the profitability of the company, the market size, become more pertinent questions. How the founders can grow the company frugally, what is the kind of market that they can capture, what are the kind of anomalies in the current systems that they can solve for. So I think a little bit of it evolves as the stages of the company sort of progress. But obviously, the fundamental expectation of any venture capitalist is to see their company grow, and obviously, just like any other asset class, provide the risk adjusted sort of returns, for the fund managers.
Hey, Mr. Agawa, you're talking about the growth. May I say how much growth they are expecting by the venture capital?
Right. So I think it's very difficult. It really depends on the vertical of the business and the stage of the company. I think at the earliest of stages, it's more about finding your true fans that love your product and getting let's say the word out through word of mouth, through customer love, or whatever channels that you can deploy. There is, I think, every sort of business vertical has different sort of growth expectations, and they also come with the stage of the company. You cannot be expecting companies that have, let's say, that are at an IPO stage, that have gone public. You cannot be expecting the same growth rates from those companies that are at the very, very early stages. So I think growth that way is subjective, but yes, investors are always looking for growth, depending on the stage of the business that you are. Yeah.
Technology is a major aspect for any venture capital, what I find out.
Yeah.
Have any view on that technology? Well, what type of technology they should adopt?
Right.
Production
So I
of-
think in the venture capital world, I think a lot of the investors, I think the major facet that any sort of entrepreneur needs to demonstrate is how they can use technology as a lever for growth. So what are the redundancies? What are the processes in the normal running of the business that you can sort of technologize and you can productize and you can make more efficient with the use of technology? So I think at the end of the day, technology can be built, but it's also about how, let's say, you marry the technology with the on-ground execution that the founders show. So it's a mix of both, but I think we're living in interesting times where, let's say, the growth of the growth of technology in the last few years and even in the next few years is expected to be exponential. The pace of technologization is only increasing. So the changes that we've seen in the last 10, 15, 20 years, we are going to see them a lot quicker. The cycles are going to get a lot shorter in terms of tech innovation. So I think as long as the founders are sort of, they know they are on the front foot, keep innovating. That's what I think the expectations of any investors are.
Very good, Mr. Agarwal. You can tell us what is the recent trend in venture capital funding?
Yes, of course. I mean, there are multiple sectors that will continue to sort of invite investments. So I think the common sectors continue to be fintech, health tech, edtech. Apart from that, obviously, new age technologies like artificial intelligence, Web3, which is the entire ecosystem encompassing cryptocurrencies and blockchain. And obviously, there are a lot of, let's say, inefficiencies in the market in the current sort of incumbent offerings that could be the largest players. So these are majorly the sectors that currently will rule the roast for the venture capitalists.
Thank you, Mr. Agarwal. I will come back to you. Now I'm coming to Mr. Akash Agarwal. He is a junior partner, Panelist Capital. He is what technologist, entrepreneur turned into investor. Mr. Agarwal, what I want from you, what are the key challenges that startup face in securing the venture capital funds? What are the challenges to secure the venture fund? Mr. Agarwal, please.
Thank you, Gupta sir. I think just before we really try to understand where the challenges come, let's sort of zoom back and try to understand what a VC essentially does. Right. So a VC is basically someone or an institution that invests very early on into companies or teams that have the potential to form very large companies in the future. Could be 5, 10, 15, 20 years down the line. Now, the intention is that they'll invest at a certain price, and then once the company scales and grows, it would have either created a lot of impact, a lot of employment, significant portion contribution to the economy, and also returns for their investors. Right? That's typically how a VC business model operates. Now, there are a couple of key components for a VC business model, which is one, of course, there has to be a very large market size so that the business can become extremely large and it's not constrained by demand. The other is the right team and the right sort of founding set. And the third is basically the product or the service they provide. Now, these three components, when clubbed with the venture capitalist's money or growth equity, can really lead to the formation of a large company. Now, without any of these four components, it's extremely difficult for a company to scale fast scale big in a short span of time. So the alignment between these four factors, which is once again the market size, the product service, the team, and the investor, the VC's money, I think that is very key to the success of a company. Now, I think every challenge or pitfall actually stems or comes from these four particular pillars of a large company, right? So, for example, if I have to really talk about one of the biggest pitfalls that comes with the fundraising aspect, which is a lot of times founders start thinking that the business is about fundraising, and that's not due to the founders. That's essentially because whether it's us, whether it's the media, whether it's the macro environment, it publicizes and talks about funding a lot more and valuations a lot more than really talks about the outcome. Now, what we need to remember is that the funding is simply a milestone. It is not the destination by any means. What we are in is the company building process, and raising capital comes with a lot of drawbacks. So every time founders are thinking that on my next milestone, my next success metric is to raise capital, they are usually wrong, because it will come with its own set of challenges. It will come with its own set of risks. And what founders need to remember at this time is that they are building a business for their customers. They are not building a business for the VCs. And that's how everyone's interests are actually aligned. What really happens is that when you are building for consumers and for the market, you will essentially build very localized problem solutions that need to be solved for. You will not really build copycat models that can just draw capital because they've worked elsewhere. Now, the other challenge that people actually face is when they're catering to a very large market, especially in today's macro competitive environment. What you really need, and this we've seen really good with second time founders, is that they come with a very strong GTM strategy or a go to market strategy, which is how they penetrate a certain market. They focus on a certain customer segment and a certain product or service, and they make sure they gain a very strong foothold into that market. And I think this is one challenge that first time entrepreneurs in general face. They come to a large market and they get confused as to how to really go into that market. I think the third would be essentially getting the right cheerleaders early on. This helps with a couple of things. Right? One is, we all know that it's a 5, 10, again, maybe a decade or 2 decade long journey. So you will inevitably make mistakes. You will definitely go wrong along the journey. So what you need are some people who can support you at that time, play devil's advocate, give you the right insight, the right knowledge, and provide you access. I think getting cheerleaders, whether in the form of angel investors, whether in the form of advisors, mentors, it's extremely important. The fourth point that now I think, when I started back in 2014, at that point of time, there really was no ecosystem. You could not find too much information on fundraising and on capital out there. But today, all you have to do is go to YouTube, literally look for videos on fundraising, on product market fit, on development of startups, and you will find immense amount of channels, starting with something like a Y Combinator, which gives you the education you need. So when you're actually tackling this market or investors, you actually know this is what is required and this is the language that is essentially spoken. And I think that really helps. And lastly, I think one of the biggest pitfalls that we've personally seen is been that a lot of founders and founding teams get a little confused in a very large market. They start because of a lot of competition or macro factors, they'll start doing a lot of different things. I think from a VC's perspective, especially in an early stage, it's very important that the founders focus and make sure that they do 1 or 2 things right. And then once they've gained enough critical mass, actually look to scale their business horizontally.
So, Mr. Agarwal, I think you have rightly covered all the team. You're talking about the market, you're talking about the productions. So, Mr. Agarwal, just I want to know from you regarding what these are the major challenges you are telling. Any other challenging regarding the social responsibility, or you can say environmental, or any other challenges which entrepreneurs are facing?
I think a couple of things that, I'll touch upon the social responsibility in a bit. But I think one of the challenges that entrepreneurs are facing today is, given the hyper competition and the hyper funding that is very cyclical in nature, it gets very easy to get lost, right? When is the right time to raise money? Who is the right investor? What should I do in light of very stiff competition? So again, keeping a very clear mind, very concise mind as to what problem you're solving, who your customer segment is, and more importantly, why you're doing that. I think that's most important. And also keeping focus on the fact that this is a long journey. This is not something which has an outcome in 2 to 3 years. It is something which will have an outcome maybe in 10 years. I think that would be absolutely critical. Besides that, on the social responsibility angle, look, startups have more responsibility than sometimes even founding teams know, or that we attribute to them. If Digital India is going to create, let's say, over 100 million jobs in the coming decade, I think it's very important for us to understand that it is not just about return on capital or becoming, unicorns or multi-billion-dollar valuations, but it's actually about providing employment. Swiggy and Zomato today by themselves provide employment to 2.5, 3 lakh people. And I think they are third or fourth behind the Indian Railways defense. And that's the kind of impact the startups are creating. So yes, it is very important. We have a lot of startups in our portfolio who are creating so much impact in the MSME segment, which has typically been very cash starved. In rural areas where women have generally found it difficult to gain meaningful employment. And I think that kind of social impact is very, very hard to measure. No matter how much tangible metrics you put to it, I think true fulfillment really leads from the fusion of social impact and, of course, monetary gains.
I think, Mr. Agarwal, what I'm talking about the entrepreneurs, it is said that they are building up the wealth, not income. Because you also rightly touch the point that it is long-term ventures. You cannot say short-term. When you are earning something and you should withdraw your fund or your salary or something. Have any of that wealth, we are talking about the wealth, not income. Have any things in your mind?
So I think this is a very important point. And you're right. Uh, you know, at the end of it, if you just break a business down to its bare bones, and India is a land of MSMEs and micro entrepreneurs. आप तो जानते हैं, what we do is essentially, we've had our fathers and extended family who started shop. They've become, over the course of 30, 40 years, small businessmen who earn meaningful incomes and provided for their families in the community. So I think a business's core fundamental responsibility is to become profitable. And it really does end with that, because that's where a lot of more avenues really open up as well. It is extremely important for every business to know that at some point of time it needs to start generating free cash. It cannot just be growing in terms of valuations, because it has no relevance, right? Eventually, the chickens come home to roost, right? You will have IPO events, you will have market events where your real value will come down. But at the same time, what we need to understand is that certain startups, certain companies have a certain trajectory, especially in a very competitive landscape, right? You sometimes need to really, quote unquote, burn capital to reach a certain critical mass from where you can start commanding pricing power. And that's something that we've seen across startups. Not everyone is doing it right. A lot of it has gone lost into all that's happening around us in a very big way. But there are definitely companies out there which are focusing on the long-term health of the business, which is generating free cash flows followed by significant profitability and identifying large profit pools over the course of years.
Very nicely, very intelligent person. I am very happy to see the viewpoint regarding. I think, excellent. If you need me, I can come back to you.
Yes,
Mr. Kumar Ruya, he is CFO, Finance Director, Subcontinent Regions, DP World. Mr. Ruya, just I want to know from you, how do venture capital firms assess the potential of startup operating in emerging fields, such as artificial intelligence? I think this is a most important aspect which I want to highlight, and blockchain and quantum computing. Hand over to Mr. Ruya sir, Hemant sir.
Thank you, Gupta ji, and people on the call. See, these are all what Gupta ji has said. These are all new age technologies. They've been, to be honest, they have been in the rounds for the last very, very visible in the last 5-6 years, for sure. They have been there. And some companies have adopted it, either one or two, or maybe a mixture of them. But has it gone into, large-scale public use? Maybe the answer is no, because they are niche and people are still grappling with, sometimes some people are grappling with what they mean. Some people, while they understand what they are looking for real use cases. So having said that, in my opinion and my interactions with the VC firms, what they typically do is they have also become a little selective. So they will say, I will only look at possibly startups in the artificial intelligence area, because all three are so wide that it sometimes becomes very difficult for those people to take a holistic view of all. There are some who do all, but gradually what my sense of speaking to the firms is that they are becoming very selective and they're focused on AI or on quantum or on blockchain, sometimes a combination of them. And what they are looking at, in my interactions with them, what I've been able to suss out is they're primarily first looking at the business concept that the startups bring to the table. What is your concept and what is your plan? A. B. What is the market opportunity you're trying to scale up? Because ultimately, at some point in time, the VC will also want to exit, right, with profits. Okay, so the larger the market that you're addressing, the more profitable his exit will be. So he's looking at an opportunity where you are niche, you are serving, your startup is serving an unmet demand. Your startup is having a concept which is scalable, and there's a huge market opportunity. Now, once he has done that, the other two big things that he's looking at is what is the quality of management that you have? Because the concept and your plan may be awesome. The market opportunity may be awesome, but to scale it up, to grab that market share that is there in as a vision or in your plan, you must have a competent management team to scale it up. Now, a good idea with a poor management team is not preferable. A good management team with even a little lesser great idea is still preferable, is how they go about it. And obviously, the last piece, and possibly sometimes it becomes very important also, is risk. What is the kind of risk that they see in the venture, in the startup? And they're looking at issues where the risk of scale up, the risk of competition coming in and ensuring that they replicate the model fast. So the profitability of the current startup in which they are invested goes down, and obviously the risk of not scaling up. So, Mr. Gupta, I believe that broadly these would be the areas where the VCs would be reasonably fluid on and wanting to delve a little more to understand whether or not they would want to go ahead.
Why, sir, Hemant, I think you have covered very nicely for the. When you're talking about the artificial intelligence, whether robot, other things can play important role, because now
Sorry?
technology under robot, or because this technology is changing very, very fast. Today technology, tomorrow technology, how the startup will face these challenges. That is the point. We have any view on that? Blockchain, everybody knows for that. Even when we're talking about the artificial intelligence, to have any view on that aspect, that is practically I'm asking from you. Yes,
yeah. To answer your question, if we just step back and put it simplistically, anything which copies or mimics human behavior,
sir,
or a human inclination is AI. I mean, बहुत simplistically अगर अपने इसको देखें तो, let's not put too much of rocket science around it.
Right, sir.
And it is able to predict and forecast.
It is only prediction. I agree with you.
Okay, so it should be able to mimic a human behavior with predictability or its ability to forecast.
Yes, sir.
And basis that, so if you were to, let's say, compare it hypothetically, just to drive home the point, if you were to compare it with, let's say, a bot will do something, a transactional thing which is repetitive, which will continuously do it. It's not forecasting anything. You have to draw your own insights from the transaction that a bot is doing. Whereas AI will possibly give you an indicator of what is going to happen. And then you draw your insights. So you are 5 steps ahead of the curve and the speed, obviously. A human being will also come possibly to the same conclusion, but the speed at which this AI will work will be a little more than, or you may require a battery of human beings to get to the same conclusion at the same speed, possibly.
Sir, research is going on where I think the human will be replaced by the artificial. They are thinking that respect. So I will come back to you, Mr. Roya, sir. Now Rajesh Sehgal is there. Rajesh Sehgal has come. So now I'm coming to Rajul.
Yes, very much here.
Sehgal sir is there. Very good, very good. Mr. Sehgal is a CFA managing partner, investment. And Mr. Sehgal, just I want to know from you, how are the investor balancing the need for realistic valuation? I think this is the most important aspect. Valuation. Any venture capital will see what is the valuation of that company. What is the enterprise valuation? Our new company has come. He established the only idea. He want to implement that idea. Now, how to assess the valuation? Mr. Sehgal, please.
Gupta, yeah, you've kept the most difficult question for the last for me.
I know. That's why I know this is a most important question and this is a very difficult question to answer.
I tell you, I think this is it is an area of very deep emotional resource for both the founder of the company as well as the investor. Because you can have all kinds of belief in what you're doing. You can believe in the long-term future of your business. As an investor, we may believe in the future of that business, but any deal that has to be struck is always struck at a certain price, which is the valuation. And so both parties, have to try to make it a win-win. Now, that said, it's not an easy exercise to do valuations when you're talking of early-stage companies. And allow me to give you a little analogy to understand this better. So I think as you look at business and business's life cycle, you have to compare the life cycle to a human life cycle. So one fine day a baby is born and a business is started. That is where it all starts from. And I think as life has it, there's a life cycle curve of a human being, and then there's a life cycle curve of a business as well as the business grows. And I think at the early stage, when the baby has become a child, it is very difficult to assess कि ये बड़ा होके क्या बनेगा. We all have aspirations, we all have expectations, but we do not know what is the economic value that this child is going to have as the child grows into a fully grown man. And I think similarly, as a business, in the early stage, it is very difficult to assess how big will this business become. How much economic value will this business create? And I think therein lies the trade-off between, as I say, art and science. So when you talk of a mature business, I think 70-80% of the valuation of that business can be arrived at using valuation models, a variety of them which are available. Which is a very scientific approach to arriving at valuation of larger companies, let's say Reliance Industries, Infosys, Paytm, or any of these larger companies. There's a lot of data available to value those companies. But that is still 70-80% of the exercise. 20-30% is still subjective, and I call it the arts part of it. There's no science to it. But as you come to early stage startups, I think वो flip हो जाता है. 70-80% now is art, is subjective, and I think 20-30% is science. So there are valuation models available, but at the early stage of a business, it is very difficult to assess the value of a company using only formulas and models. So this brings us to this whole juncture of when we are negotiating with a company or when the founders are raising capital. It becomes a very difficult exercise to have a win-win situation in terms of valuation. And if it is not in situation, then वो आगे चल के कहीं ना कहीं partnership में दरार पड़ती है, because one party may feel that either they overpay or the other party may feel that they got shortchanged. So I think it's a very it's not just a valuation exercise at the early stage. It's also a lot of relationship building and making sure that both parties feel that they've walked away from this negotiation in a very successful manner. I hope that answers your question.
You are rightly answered, sir. Point is still unanswered because for early stage, when he has only idea to sell, he has no collateral, he has nothing else with him, only some ideas, business model.
Yeah.
So he has no team, he is the only person. He will say, I will engage the team, and he has model. Because somebody asking this question also, for a startup, how he can get the venture capital fund? That means it may go to the angel funding. Why I'm talking to you? So you are expert for angel funding also, because 20 angel funding investment you have done since 2007. Have any suggestion for such borrower who are a startup? Instead of going for a huge money from the venture capital, they can go to the angel capital, angel investor, which have their own funds. They can not borrow from anybody. Their own funds are there who is angel investor. So they cannot be useful for such people. And have any view on angel
Absolutely.
fund? Ajay?
No, absolutely, you're right. And I think there's a natural pyramid that has got built up now, and I think India and India's early stage ecosystem, both on the company side as well as the investor side, has matured over the last few years. As we've seen. So I think what we have today is a very robust venture capital ecosystem. Of course, it's still a long way to go when you compare the Indian ecosystem to the Silicon Valley or Israel or China even. But I think Indian VC ecosystem is far more mature today than it was even 5 years back. And I think when you come down to the angel ecosystem, the angel ecosystem has grown tremendously over the last few years. And this is thanks to a lot of angel networks. There's Mumbai Angels, Indian Angel Network. There are a lot of platforms now, Let's Venture, Lead Angels, Angel List, etc. And I think every city, at least the larger cities, every city has their own angel network. And a lot of these syndicates have been formed. So I think when a founder is looking for capital, he or she has to make sure that the capital that they are raising is commensurate with the size of the business. And like you rightly said, Guptaji, when a business is just about an idea, you're just about starting. You want money to hire people, to get an office, etc. I think at that stage, it's sometimes advisable to first, even before the angel investing, it's advisable to first put your own money in the game. Whatever money you may have, 5, 10, 15 lakhs to do it. And the next stage that I usually recommend is to get money from friends and family because they know you best. After that, you can go to third-party angel investors, venture capital, etc. Because जब आप angel investor के पास जाओगे, or if you go to venture capital investors, the first thing they're going to ask is, do your friends and family trust you with money? Have they given you money? Do they believe you first of all as a person? And I think that's a huge vote of confidence for angel investors also, if your friends and family have participated. Likewise, when you capital investors like us, I think it's a huge vote of confidence that some angel investors have given you the money and you use that money wisely. You use that money to hire the right people, to build the technology, to get some customers, etc. So it's a valid, and therefore, as I said, ये जो pyramid है, this ecosystem of investors has now in India, actually, it's a little well formed. So yeah, to answer your question, yes, you should go to angel investors as well.
Sir, Sagar Saab, you are right, very, very rightly, because this was one question from Ayush Kumar. So he was asking for the startup, how he seek his funding. So I try to reply from the beginning from you. And you have rightly say, firstly, you come from your own source, your own investment, relative friends, and other sources instead of going to angel funding or something in a venture funding. That is the first. I think that give a proper reply to Mr. Ayush. And Mr. Soni Dhawan is also asking your investment thesis. Thesis we have already covered. Focus area we already covered for that, because that is a business model is most important aspect of things. Then you have to see the marketing. Then technology these days, even I have told you from my opening remark, about when we are talking about investment, about 12% is from the fintech and 49% from the, you can say, consumers. And from the software, about 15%, other is only 24%. That means, firstly, you have to invest your money
Yeah.
before you approaching the venture capital. I think this is your answer, Mr. Sagar.
Absolutely. Absolutely. I couldn't agree more with you. Yes.
Thank you very much. I will come back to you. Now I'm coming to last
Sure.
issue. Madam Rajul Sanghai, who is a principal investment, Bombay Angels. This is most important question, madam. I'm asking you. You are the last. Lekin major point is, how do you see the Indian startup ecosystem evolving in the future? How future? When we are talking about the future, I also told very clearly that India is the third position of the startup. After USA, China, India is the number third. And when we are talking about the top during 2022, India topped China by creating 23 unicorn in 2022. Now 22, we are talking about 23, and we are talking about 25 when our Honorable Prime Minister dream is to 5 trillion economy. So when we are talking of the startup, how much mushroom growth is there for a startup? And they can play very important role for the development. When you are talking about the Ola, when you sitting in your home, within 5-10 minutes you can have your car. Ola, Uber, that concept has come. Zomato, you give order, any restaurant they can supply you within a 20 or 30 minutes and undergo a vast change. OYO, see the OYO, how they have done it. These are the startups. So now, what is future, madam? I am asking you. And you are the right, madam, to give the answer.
Yeah, thanks, sir, for asking this question. So I think, so first let's understand what does a startup ecosystem mean. It's basically a support system for entrepreneurs to grow and to nurture their businesses. Most of them are young entrepreneurs. We see a lot of entrepreneurs because we invest in very early stage companies. So we see a lot of entrepreneurs who come directly from college. Sometimes we see students, launching their own startups, etc. So it becomes very important to have a good support system in place. When you talk about the support system, there are various aspects to it. The most important aspect is having mentoring support. So this can come either directly from the industry veterans or startup founders, your circle, alumni network, etc. And the other set is getting into an incubation center, an accelerator, or some corporate connect programs and stuff like that. So now discussing in a little detail about incubators and accelerators, because that is a very important aspect in the ecosystem, because they help you get access to funding. It gives you a network. It can help you reach to market or basically expand the market. It gives you access to mentors at a lot of time. So when a founder starts up and the company is very young, I think incubators are the place they go to. They help them create the MVP of the business, etc. And incubators generally have a larger, duration in terms of supporting the founder than an accelerator. Once your MVP is ready, you go to an accelerator. They help you scale the business, reach out to more markets, etc. So in the last few years, we've seen a lot of accelerators, incubators coming up, like we have T-Hub, V-Hub, we have Huddle, we have Velligro. A lot of VC firms also have their own accelerator programs, etc. So this is really a very important part, and I think this will only continue to grow. Even if you look at it from an investment perspective, I think this funnel of startups, which basically come out of incubators and accelerator, provide a very good funnel to angel investment platforms, etc. Because an idea is somehow validated, they've got the mentorship. Accelerators also help you achieve certain matrices, etc. Key matrices, etc. Are, they support you in that. So that becomes the most important part. The other important part in terms of investments is, of course, you get this support from accelerators. The rise of angel networks in India is also one very important aspect. I think you just briefly, you and Rajesh touched about on this angel investing, momentum that India is gaining in. So as rightly mentioned earlier, I think angel investments come right between your friends and family round and the VC round. So the lines are blurring these days, but yeah. So we have seen a tremendous increase in the number of investors who are keen in investing in this asset class. So that gives a big support to the ecosystem. Then we are seeing, in terms of other favorable movements in terms of the ecosystem development, our government initiatives, etc., which are creating a significant impact. So I think, yeah, these are the most important aspects, and we see that, and I think, and I hope that the accelerator, incubators, mentorship programs, etc., these continue to grow, because these are the places where entrepreneurs get their first level of support and get access to networks, etc.
That means, madam, incubator can support the startup to
Sorry?
get the funds from the venture capital.
Sorry, sir, can you please repeat the question?
Whether incubator can help the startup to have funds from the venture capital.
So see, incubators typically come in very early in the life cycle of the business, and they generally help you, set the MVP, etc. But once that is done and you become a part of an accelerator, accelerators generally have an intensive mentorship program or a training program, and they help you achieve certain business matrices in terms of growth, in terms of getting the users, or in term, etc. So yeah, I think that becomes a very important funnel, at least to the angel investment platforms, because that also proves that you've got this mentorship, the idea is validated, and yeah, so accordingly it will feed in the VC funnel also once it comes in the angel funnel. It's the same pyramid that I think Rajesh was talking about earlier. So incubators, of course, this doesn't mean that I am saying that we don't look at companies which are not part of incubators and accelerators, but I'm saying it is just generally a validation. Once you've been through an accelerator program, it is a validation and it feeds in the funnel directly, and it gives confidence to investors. If you are able to get into some reputed programs, accelerator programs, that definitely helps.
Okay. Madam, when we are talking about incubators, when we are talking about the China, they are having 14,000 incubators. In India, I think we are hovering around 450.
Yeah, that's right.
So why such difference is there? Why India cannot create such an incubator which can be helpful to the startup?
So
That's
see,
what you're talking about.
yeah, so see, I think it evolves over time, right? So we are the third largest ecosystem. Of course, China is ahead of us. China and US are ahead of us.
Right.
So yeah, but we are definitely seeing an increase in the number of incubators. I think most of the colleges, engineering colleges and management schools, etc., have their own incubation centers. We've seen incubation centers which run from government support, etc. So yeah, this is an increasing trend, and we hope that this continues and it supports more and more entrepreneurs.
Madam, you work in both sides of the table, whether you're talking about the entrepreneurs or you're talking about the investor. So have any advice to our listener, to our startup? Any advice to you? Because you are in both way, which I have seen your data. So where data say that you work in both sides. You also written like that, both sides of the table.
Yeah, that's right.
Have any view on that? Any advice to our entrepreneurs?
So yeah, I think for entrepreneurs, it is very important, the pitch that you make to the investors. So basically, you should identify the problem very clearly. the market should be addressed, and what is the market that you are addressing, that should be defined out. You should be totally aware of your competition, and be aware what your USP is, what your moat is, and basically some numbers, some traction, etc. Should be there to show to the investors. Of course, valuation discussions I wouldn't want to touch upon because that's a very wide topic which is already covered.
Yeah, it already discussed.
Yeah, that is what I'm saying. It is already covered.
Any special advice, because you work in both sides. That's why I'm asking you this question.
So see, I think most important thing for entrepreneurs then in that case is that you should, while the product may be very good, at the end of the day, the goal of the business and any investor for that matter would look that the business would be able to generate money at the end of the day. So it's very important to, focus on the correct matrices, unit economics, etc. It should not, while of course growth is important, but it should be a sustainable growth, and the business should be able to make money at the end of the day. So unit economics, etc. becomes very important.
Okay, thank you very much. Now,
Yeah.
question is from Mr. Perry. Aditya Perry, sir, you are there?
Yeah.
There is one question for you, sir. Can you elaborate what kinds of investment options are there for a not-profit organization working extensively on sustainability? Have any view, Mr. Perry?
Typically, I think our fund doesn't really support non-profits, right? But overall, I think the most common instrument that non-profits can kind of capitalize on is grants through some of the family offices, foundations, and CSR programs of different corporations within India. So I guess given that each CSR has to, each company has to kind of put in a certain percentage into the CSR programs, I think that would be the best bet. Second would be the likes of the foundations such as Bill and Melinda Gates Foundation, the Michael and Susan Dell Foundation, along those lines. And the third would be family offices who are more philanthropic in nature.
Okay, sir. I think if a non-profitable organization, sustainability, I think venture capital fund, I think it will be difficult to take from them, because their major idea is to have a return on the investment. So have any idea for that, Mr. Perry? Whether they can get the funds?
Sorry, can you come again? Get the funds
I'm coming to
from?
elaborate what kind of investment option are there for not a profit organization. He's asking for NGO or something who is not giving a profit. Whether venture capital will invest in that firm?
Typically, no. I think all VCs
Yes,
and
it is no. How our NGO can be invested by the venture capital when there are no profit, there are nothing else. The return is not there. He cannot go to the public, and their share, how the exit route will be there. I think that is difficult. So another point is Uncle Singh. He's asking, what do you look for a startup before deciding to invest? I think we have already covered this question. Hello, Mr. Gupta. No, it's right. I am having a experience in the instrumentation and automation of the water wastage power. Iska have any reply from your side, Mr.? Anybody can reply? Bipan Chand. Bipan is asking some question that he has started the company and remote monitoring system which use the product manufacturing by our company. We are looking for investment in the scale of our offering. So if he is a startup having a financial model, that is profitability, other things are there, I think he can approach to the venture capital or angel funding. So another question is made over, was established in 92 have a development of the software platform for local marriage. I think this is not any question. Have they made ever? He's only giving his viewpoint. Dear attendant, requested to please other complaint to team resurgently arranging a webinar on important subject. Very good. सीजन गुप्ता जी, परी साहब आपके लिए क्वेश्चन हो रहा है। परी साहब आपके योर फेवरेट CSR type of funding one can get if one is known to the management. SC Agarwal.
Not necessarily. I think that there are a lot of, I guess, corporations which give
Who
CSR
is
grants.
funding by the venture capital? No. Go,
Yeah.
Mr. Pari. He asking
Yeah.
you. That's why I am giving a reply. Like, what do you views? CSR दे सकता है क्या?
Yeah. So usually, for NGOs and non-profit organizations, the three key areas from where they can get funding is through CSR programs, foundations, and family offices who are focused on philanthropy. So those would be the three key areas. In addition to that, I think some of the large, I guess, multilaterals also give out RFPs from time to time for certain grants in different sectors as well. I hope that answers the question.
I think this is CSR is the question of the profit. Out of the profit, they are giving the CRS. If a company startup is getting a profit and he is marking the fund for CSR, definitely they can take it. Another question from the Shivaram. What are the sort of EBITDA percentage that VC look for early investment in the food sector? हाँ जी, EBITDA कितना % होना चाहिए? कुछ है इसका आइडिया आपको? देखिए, जहां तक है इन्वेस्टमेंट है, मर्चेंट ये क्या वेंचर कैपिटल वाले हैं, वो तो कहता है जी मुझे 100% रिटर्न चाहिए किस केस में, क्यों तो 25-30% तो रिटर्न आम दे आर आस्किंग फॉर दैट. क्वेश्चन इज अकॉर्डिंगली EBITDA should be there. Global learning session thanks to resurgent. If the entrepreneur has access to debt, should he go for equity dilution? Has Parisam any view for that? If an entrepreneur has access to debt, should he still go for equity dilution?
Sorry, I can't. Can you repeat the question, please?
Sir, लिखता है if an entrepreneur has access to debt, should he still go for the equity dilution? If he is getting a debt, debt can be substituted by the equity.
Yeah, I think if like early stage enterprises are able to get debt funding, they can take the option up as long as it doesn't affect their cash flows too much. Right? Typically, we don't advise early stage enterprises to take on additional debt to keep the balance sheet also kind of stable. But if there are certain options which are lucrative for these early stage enterprises, then yeah, that is certainly an option that they can consider.
Okay, sir. Then a question is in invocations for madam. Can you reply, madam? Rajul.
Sorry, yeah, you
Can
can,
you help me?
yeah.
College educator, you can help him.
Yeah. So, sir, maybe they can write to me separately and we will take the discussion forward from there.
Very nice, very nice. You can write to madam. Or stick to one language. What would look good, not to keep in hand in front of his mouth. If the best was to stick one language, what one should look. What is future of the e-based management company in India? Future क्या है? E-based management company का कोई future है परी साहब? You can say something.
Sorry, not too familiar with US.
E-based management has a few great future. Kindly go through the question answer also. It is a future of goods level. It has done one pilot project on beverage mango fruit, and he was done to making the identification done, distribution network. Can we get a CV or how we approach them? We have to भेज देना sir CV. This is a Deepak Dave, ACE Chemicals, Ahmedabad. Our is a kindly project again. Thanks to NDA Manufacturing of India, we are Exclusively distributor. Very good. He's on advertisement. Ford has a brand. Very nice. So any other question? I think we try to cover all the question. What advice you had a founder just starting? We have already replied, sir. You, sir, we have replied. Vinod Goyal. Will recent change in budget regarding startup help investment in startup? Parisa, have any view on that? Parisa,
Sorry, what's the question again?
Vinod Goyal is asking, will recent change in budget regarding startup help investment in startup?
Yeah, I think in addition to the budget as well, India is one of the most resilient economies right now, right? So there are a lot of foreign investors who are looking to deploy capital here as well. And as the other panelists mentioned, the HNIs within India and the angel networks kind of booming here. So yeah, definitely we see India as one of those focus countries where investments will be catalytic.
Okay, sir. Then Mr. S.C. Agrawal is asking for Mr. Sehgal. Mr. Sehgal, you are there? Sehgal, sir. Sehgal ji. There are about 82 families of snake charmer in my village. Can they provide out of your CSR type of? You have to approach the different, you can say, a star or a big corporate, big, you can say, just like Tata Birla or some people who can help you. Rahul ji, would you able to incubate teams of engineering college? Okay, madam, please see to it. If you can write to madam.
Yes,
Do
I
you
will
have
take
any
it forward
MOU
with them. Yeah,
with
yeah.
the school to support the incubation scheme? क्यों है कोई मैडम आपके पास कोई MOU है क्या इनविकेशन के लिए मैडम?
किसके लिए MOU? Sorry, sir.
Do you have any MOU with B school to support the incubation initiative? I would like to initiate with.
So yeah, we do look at incubation centers, etc. So I'll take this conversation separately, one-on-one.
Okay, you can write to madam.
Yeah.
What was the idea way to valuation of the startup because the information is not published available? Any specify the with everyone? क्यों सर वैल्यूएशन पर जो आपने बोला था, whether you can say something, Mr. Sehgal? Mr. Sehgal, yeah, left. What is the idea way to valuation of the startup? Because valuation, देखिए important what you are yourself is writing. EBITDA is the most important aspect. Marketing, other things should be there. So you have to sit with the venture capital and discuss with them regarding valuation. There is no hard and fast formulas for the startup. Email Raja. I think we have covered and we are overstretched the time also. So at the end, I am thankful to all my eminent speakers who has discussed the in webinar in personal, you can say in practical aspects. What is their experience they have shared with them. So I have no word to express on behalf of Research in India and myself, Mr. Prakhar Agarwal, Mr. Akesh Agarwal, Mr. Aditya Pari, Himmat Kumar Roya, Rajesh Sehgal, and Madam Rajul Singhvi for their well thoughts, for their practical experience. I think our entrepreneurs who are listening, which are more than 600 registrations with us, they will be happy that this webinar is very fruitful for them. I'm also thankful to my team who organized such important webinar and requested all the participants to oblige us by attending this participation of this webinar. I think today, this is the first time where so many questions were being asked from our eminent speakers. We are thankful to them. I'm thankful to Mr. Rohan and Lokesh, Sukhdev Goswamiji, and Joginder sir, who is behind the scene, behind the cameras, and who is helpful to us for organizing this type of excellent program. We represent research in India, who are a merchant banker, investment banker, technical economical viability study. We are doing it. We are doing technical, even training to the bankers and insolvency. So many other things as an investment banker also. So any DPR, other things required by any startup, that we can also helpful to them by preparing the DPR and helping them to raise the fund. Thank you. At the end, I'm thankful to all my participants also, who always give their good feedback to us and always oblige us by attending in a large numbers. Thank you very much. With the end, all the eminent speakers, I'm thankful to them, and this recording will be shared with all the eminent speakers also. Thank you, sir. Thank you. So thank you all the persons.